As we warned last week, the Australian dollar was very volatile around the US election results. As voters went to the polls, the Aussie dollar rose as high as 77.78, its highest level since April, in anticipation of a win by Hillary Clinton. But as the results came in and it started to look better for Donald Trump, the Aussie dollar sold off in line with global equity markets. It fell below 76 cents in this period. Over the next day or so, of course, US equity markets in particular rebounded sharply. That helped the Aussie dollar stabilise somewhat, but it's still about 1.5 cents below its level before the votes were counted. There are mixed implications for the Australian dollar from a Trump administration. On the positive side, Trump's plans to spend big on infrastructure are likely to support growth and demand for commodities. Both Clinton and Trump campaigned on increased spending for America's aging infrastructure. But while Clinton would have faced a hostile Republican House in the Congress and therefore might have struggled to get her program through, Trump is likely to enjoy the support of the House and Senate and thus be able to spend that money. But on the negative side for the Australian dollar is Trump's protectionist trade policy. On the campaign trail, he spent a lot more time talking about this than he did about infrastructure. Since the election, the Mexican peso has fallen to a record low and all Asian currencies are weaker against the US dollar. The optimistic case for Asian trade is that Trump was only threatening to impose tariffs on China and other Asian countries as part of his campaign rhetoric, and that when he gets in the White House, he will take a far more measured approach. That's possible, but it does seem more likely that Trump will take a number of protectionist trade steps at least in the early stages of his administration, including labelling China a currency manipulator. Uncertainty about such actions is likely to weigh on Asian currencies for quite some months. This is likely to unsettle the Australian dollar and help keep a lid on the rally that has been supported recently by rising commodity prices. In the week ahead, there will be a lot of interest in testimony by Fed Chair Yellen to Congress. And in Australia, we do have quite a busy calendar. The Reserve Bank releases the minutes from its November meeting on Tuesday. On Wednesday, we see third quarter wages data, and recently that's been running very weak. And on Thursday is the highlight when we see the October jobs report. Remember that August and September were very poor reports with a fall in total jobs in both months. Markets will be hoping for something better in the October data, as will the Reserve Bank. All of this is likely to keep the Aussie trending perhaps a little bit lower, still volatile, but with the ranges falling slightly to perhaps 75 to 77 cents. We'll speak to you next week.